Hello, everyone. Welcome back to the Trading Room. I'm Shane Vernier, and this is the U.S. Mid-Session Brief Friday edition. First and foremost, I want to welcome everybody to the Trading Room. If you need a broker, check out switchmarkets.com. Pretty darn good broker. We're running a 100% credit bonus right now, so if you're interested and you need a broker, get on in there. Traditionally, on Fridays, I go through my No Donation Friday spiel. Today's not a No Donation Friday. We had core PCE out during the pre-market. I've had a couple pretty darn good trades come across the line in gold. I'm excited about that. Let's get right out to price action here. I want to sort of set the table for where we're at with regards to our live trading. Here's another real money trade that we've got today. Right now, I'm looking to sell WTI crude oil. This is a ranging market. I've got my sell order right up there at 70. That's my first range number. Don't worry about how that number comes across the board, but we've got a daily 38% retracement up there at 69.05. So if we do see WTI crude rally roughly, I don't know, 39 cents or so, 30 cents, somewhere in there in the next 30 minutes, and we'll go ahead and we'll take the short. I absolutely have nothing to hide on this thing. I will step up and trade my real money in front of you and just execute and show you what I do. It's been a darn good week. For active traders, at least from what I've seen. Today's been a pretty darn good morning too. We've had gold. Gold was absolutely a fantastic market earlier today. I'm going to break that down for you. We've also got a couple of trade ideas. Just sort of walk you through what we're going to try to get accomplished here. We've got an intraday high right up there at about 68.64. Now, right now, I'm watching my ADR, my 13-period average periodic range, and we're looking at about 47. So that means that our next 30-minute bar on WTI crude oil is going to run in roughly at 47. That's my top side projection. So right now, I'm looking at the low of this bar, and I'm saying, okay, 68.29. What's 29 plus 47? I believe it's 76. 29 plus 47. Boom, right there, 76. Okay, what I'm looking for here is a little bit of a sell-off right from in front of the 71 level. I expect a little bit of compression at 75. This is going to be a very, very, very fast trade if we're fortunate enough to execute this thing. I'm not going to dawdle. If this thing breaks against me above that intraday high, we're going to rip the Band-Aid off and take a small loss because there's no way that I'm taking a big loss this late on a Friday. Had a great morning, sort of lets me frees up my hands, takes the handcuffs off. So now I have an opportunity maybe to take one more risk and walk away with another $100 or so, maybe $200. We'll sort of play this by ear as this trade develops. But I'm looking for a fast 5 ticks profit here. If I don't get that, I'm probably going to be exiting at a small loss, which I'm cool with. I'm okay with. So I did want to start off with a live trade, sort of the dichotomy of a live trade setup and potentially one that we could get. I think we may get involved. Right now is a slow time for WTI crude. Because of that, I would absolutely love to take that sell right up there for my first range number, but I would love to sell 69 even more, and that'll be a high leverage trade, which we may or may not get here in the next 90 minutes. So I want to welcome everybody in the room. Looks like my live chat is working from all platforms. Good to see everybody in the room. Mark Corp, good to see you. Bobby Bob. It's a Friday. A lot of times, everybody, by this stream on Friday, I call this my hardcore stream because most of the time everybody has sort of ran for the hills to go watch football or do whatever they want. University of Montana Grizzlies in action tomorrow. Conference opener against the Eastern Washington Eagles, so I'm pumped up already for that. So it's, believe me, Fridays. If you don't want to trade Fridays, you don't have to. You can make enough money the first 4 days of the week to where you can take 3-day weekends. Remember, trading can be anything you want it to be. Anything you want it to be. For me, I saw some opportunities here today, so I took them. That's all there is to it. In any case, right there, Friday was the PCE Price Index. That was the biggie. Let's go ahead and do a few trade reviews. Our natural gas. This is one of the more frustrating things that you'll ever see, especially if you're using Fibonacci retracements, especially if you're using any kind of technical indicator to get you into trades exclusively. That's why I do recommend, understand how chart patterns work. Have a few different strategies that you can go with. Let's see, no donation, Daniel. I'm doing very well. No donation. I think we're gonna make some trades today. I've already made a few, I've sort of kept the risk where it has been all week because I wanted to trade PCE and at least the fallout from it, and it's been pretty good, at least in the gold market. I'll show you what I mean here in a second. But this trade follow-up, this natural gas trade, was the idea that I put out yesterday, and I'm disappointed, and I really am disappointed. And believe me, you're going to have that emotion to where you're frustrated, you're disappointed, you're angry about not getting your price. You've got to let all that go. With a bit of luck, we'll get to execute a trade here, and win or lose, we're at least in control of what the market or what we're doing in the market. right here we had no control, and it's really a frustrating thing. You can see I had my my nice entry point down there at about 27.50. You can see this one came across the board yesterday. We were looking to get a pullback and go bullish. Why? Because it's time to go bullish natural gas, and what happened? You can see right here. Here's the chart. Boom. We got the sell-off we were looking for. We got the big move higher today, and what happened? 27.40. We were sitting there at 27.50-ish for our entry. We didn't get it. What was our low? Our max low was 27.70-ish. That hurts because we've had a massive run, and really those kinds of trades right there can make you a lot of money if you get them. The problem is we didn't get them. Very frustrated there, but guess what? We can only control what we can do. And I was looking at this on natural gas futures contract, not the CFD. But what can we really say about, do I even want to trade natural gas right now? No, I can't. I have to wait. I have to be disciplined, and I have to wait for my setup. I have to wait for my setup, for my technicals to tell me when to get into the market. If I don't do that, I'm just I'm just guessing. We can't guess. You cannot guess day in and day out. I'm not into that. Get an approach. We put out a video on the 9 EMA strategy today. I showed you 3 different ways to trade the 9 EMA on intraday time frames. Check out the video. It's on YouTube, the How to Trade YouTube channel. I posted it in the live chat. If you're watching me on YouTube or watching the stream, then go ahead and check it out there as well. But let's see, looking at the 920 to do a little scalping. The 920 EMA is a great strategy. The 9 EMA is solid. I use a 13 EMA, but I use it for confirmation. If you want to trade intraday and do some scalping, that 9 EMA is a powerful tool. It's popular, and when something's popular, a lot of times we can get on a group psychology and maybe capitalize where other folks are trading it wrong. So that's a long way of me saying right here, this natural gas volume's drying up. I would stay completely away from this. If you wanted to do maybe a late day intraday scalp, you go right there from that macro wave, and that's basically your line in the sand. It'll be somewhere down in here. You're not going to get that today, but if you did, you probably could trade it. Unfortunately, I think that we're just going to have to go with the flow here and see exactly what develops here next week for natty gas. All right, we got another trade follow-up. This is a trade idea that I posted earlier today, and I did it for a couple of reasons. I thought that the Great Britain pound was in play, and Connor did some good analysis. He posted it on our X account. Go over, check that out. He gives you a full breakdown of the Great Britain pound USD. The trade that I put out is just a flat-out scalp. That's all this is. This is a scalp. Now, remember, trending markets they're really difficult to go against. Like today, if WTI crude was trending, I understand people are going to say, well, it's up 1%, but it's not trending. We haven't made a daily range. We haven't done anything yet. So maybe we break out at the end of the day. That's possible. But for right this minute, we're not trending. So I'm interested in still playing that rotational strategy because I believe it's the right way to do it. Now, as far as what can we really say about the Great Britain pound USD, rocket ship, topside trend, PCE definitely helped the bullish case for this pair. And this is the trade idea. Put it out about 2 hours ago. We've got a key level. Now, remember, you got to have a lot of different tools in your tool belt. I can't sit here all day long and say trade Fibonacci's, even though that's what I do. That's what I look at. You also have to understand how markets work. Key levels are huge. Key levels are absolutely huge. I don't care what market you're trading. When you see a big round number, especially in a trending market, odds are you're going to get a little friction there. And that, if you're a scalper, is all you need. So the next thing you got to do is figure out how to design your trades. This is a pretty darn good trade. I like this one. It's a counter trend play. We just got to wait and see if it develops. Now, the waiting is the hardest part. We talked about waiting yesterday. Natural resistance at 135. You'll see this week's highs up there about 134.34. We're trading about 133.78. I sort of outlined where I would be looking to short from, and ignore the numbers. Those aren't exactly accurate, but we're looking right there at 75-ish. 134.75 sells. My stop loss would be up right over 135, 135.09. And I would sort of be pot committed to that. I wouldn't really believe in taking a huge or letting this thing bleed against me a tremendous amount. Now, like I said, the percentages aren't right, but the risk versus reward ratio is 1. So if that's in fact what you were wagering on your account, you could definitely build this thing into whatever you want. It's a 1-to-1 trade. It's a short from right around that 134.75 area. I really like that a lot. Now, that's only one side of this market. And I posted that trade because you can watch 135 all week next week. I would love to get that Monday, Tuesday. We're probably not going to get it Monday, but we may get it Tuesday. And if we get it Tuesday, I know that we got a very good opportunity to win that thing. So that's a look inside of my trading mindset. That's what I try to get done. As far as what I would do until then, There's lots of different approaches that we could use. I could go on to a 4-hour. The problem is the 4 hours really no help with a Fibonacci retracement. We could go to a daily. I want to buy. I want to make my mistakes to the long side of this market. But once again, why do you think there's all this compression right here? 134. Where's all this compression at? It's a big round number. Trending market? Clearly a trending market. Boom. Big time uptrend, pullback, uptrend, compression right around 134. So what we're going to do here is I'm sort of going to take us out of the realm of what I usually do, but this is something that I'm familiar with. Time price opportunity charts. They're also called market profile charts. We do have this functionality on your TradingView platform. So you'll notice all these crazy lines and things. What we try to do with a time price opportunity is we try to find a point of control. All right, so right here sort of is your action on this Great Britain Pound USD 30-minute chart here, but this is the day's action. This is sort of our daily range. This is where all of our action has come in at. So what do we have right there, that white line? You guys have heard me talk about the point of control. The point of control is the area where the most volumes changed hands. Okay, so in today's instance, we're looking at about 133.88. That's your point of control. I always like to think in broader terms. I like to do something like this. I'd like to say, okay, so from 134 to our point of control, how's that? Or 175. Okay, you'll notice that about all of our volume, you see these little white lines, you can barely see them. You see those? That's where 80% of your volume's taking place, in between those price points. So when we start seeing real tight areas, a couple of things are going to happen. We're either going to look to break out or we're going to look to rotate. So I'm looking at this and I'm saying clear rotation. Big time run up right here in the 30-minute, and we just trickled down and just did a heck of a lot of trading right in that area. Why would the volume there be higher? Because of all this trading that happened during the overnight, the London session. Then we get into the U.S. session, and you can see that we're sort of challenging that area. A lot of traders would view that as being a magnet, meaning they would be looking to buy the bottom of this range, and that's no joke. It worked like a charm. I'm thinking about launching some videos on time price opportunity and market profile stuff, but I will be honest with you, it's difficult. It's hard. It's some of the concepts in there. I bet you some of you guys just tuned out because you think it's too hard. Once you get the concept of the TPO chart and you understand volume and points of control, it's easy. It really is easy. You're just defining a range. You're defining where all the volume is, and you got to understand that it takes something to move a market out of that volume. And if you don't have anything, odds are you're going to stay in that range. You're going to stay right around that point of control. That's exactly what's happening here in the Great Britain Pound USD. Now, where traders get in trouble is they ignore their economic calendar, they ignore their time of day, and markets do break and run. We've seen it every day. I'm going to show you a few that have done that today. And but this Great Britain Pound USD, you know, could I build a trade using the TPO charts? Easily. Do I want to? I don't think we need to. I'd rather outline these support and resistance levels going into next week, so we're ready to roll. If nothing else, I have 2 trades in my Great Britain Pound USD. I got my lists. I got 2 trades ready to roll for next week before we've even started. All right, and we're looking right there, 38%, 132.69-ish, so 132.70. You'll see we're just sort of in no man's land. You know, we're about 75 pips. About somewhere in there, 90 pips away from our sell, which is what I want. Real quick, you check out the key levels in our price, the way we're going to attack price there. But I'm just looking for probably 29 ticks there, 29 pips or 39 pips, whatever it was, 34 pips. Check it out. It was a 1-to-1 ratio. That's a pretty good trade. I like that one. As far as a pullback buy, absolutely. 132.69, I would be up there from 132.75 buying, because you want to be with the trend at all times unless you're going to scalp it. You can scalp against the trend, but if you're going to look for 1-to-2s and all those fancy trades, then you got to go with the trend, at least from my experience. So something to think about there. Okay, guys, we're going to unpack gold here from a bit different perspective, and then we're going to move on to our PCE Price Index, and we're just going to go ahead and line the rest of this session out and what to expect for early next week. As far as gold goes, this is gold futures. This is a very, very good chart signature. I call this a price signature. This is what I was trading today, gold futures. You'll see right there, there's your PCE Price Index top, and then we came right down. I had a nice range number where we got some beautiful consolidation. That was a nice little payday, and then we had a retracement right to 38%. My compliments to the chef. That's something beautiful. I love it when the market breaks and then enters rotation. Gold is notorious for this. It doesn't necessarily stay volatile the whole day through. You'll get a big move, you'll get a run, and then a rotate. And once we enter that rotation, that is just sweet action. Boom, right there, called the top, another great trade. So I'm still sort of looking at the bottom. I'll consider bidding down here again today, but I don't think we're going to get it. I'm actually just about ready to hang up my shield for the week and come back next week ready to roll. But as far as what everybody in this room is trading, you'll see the chart signature is very, very similar. You'll see right there, bang, it's the same darn thing. So when we're looking at spot gold or something like a spot gold, the question becomes, well, how do we attack it, number one? How do I want to trade it with the trend is the right answer. And number two, where do I get in and out of the market? Now, those are scalps. Those are intraday scalps. I don't care if I'm shorting against the broader trend. Now, when we start looking at our bigger levels, meaning our longer time frames, I 100% want to get on the right side of action. That's a pretty big sell-off in 4 hours for gold. Now, a lot of folks would believe, oh, okay, well, that's a trend. Well, is it really? I just showed you it's sort of a run and a rotate. It's not a breakaway U.S. session trend. It's a move and then sideways action. And I think the bottom of this thing's in. So at least for today, maybe not. If we push lower, I've got another entry that I really like in that futures market, and we'll do it. But right there, what do you have on your daily? This would be a trade that I would have circled, and I would have asterisks, multiple, or asteri. Is that the plural for asterisks? I would have a lot of stars next to this one. A lot of traders rate their trades 1 star, 2 star, 3 star, 4 star, 5 star. This is a 5 star. It is. That would be a 3% risk. You could even kick your risk up to 5% here. I really see this as being a pretty darn good trade. The problem with putting on too big of a leveraged trade here on this gold is that you can't hold the position the way that it needs to be held. In any case, spike low down there. It came across the board on 18th of September, and then you've got a spike high right there, the 26th. Pullback Jones right there, 38%, about 26.32. So that 26.32 area, 32.98, I'm probably bidding 33.50s because I want to get in, but I wouldn't go too much higher than that. I don't think you'll need to. Maybe 34s if you want to be real aggressive, but 26.34, it's about as high as I would go. But you're looking for a nice bounce, so that would be first and foremost on my gold action. A lot like that Great Britain pound game plan. I'm looking to buy that. But this is a beautiful daily market structure. I'm looking to get that right there to the long. And then the other thing that I would say, and I still stick by this prediction, 27.50. 27.50. That's my top side target for gold before we see any real significant selling. I know today we're down. I get it. I know today we're down, but I don't think it's going to last, not with our core PCE numbers and our PCE price index. So that's what we're going to get to today, our fundamental of the day. Excuse me, I'm going to sip of coffee here. So now as far as PCE price index, let's talk briefly, introduce what it is if you're brand new to the markets, and then we'll go ahead and break down the figures that came in and what exactly we can look for and all that jazz. All right, what is the PCE price index? The PCE price index, also referred to as the PCE deflator, is a United States-wide indicator of the average increase in prices for all domestic personal consumption. All right, the impact, this is where this definition doesn't hold water. The impact on the currency may go both ways. Okay, forget about that. Typically, a rise in inflation, a big inflation number means it's going to be hawkish for the U.S. dollar, whereas sort of a sluggish inflation read is going to be dovish. So when we think about it in those terms, what did we get today out of the PCE? Well, we got an interesting number. We got an interesting set of numbers. Your numbers right here. Core PCE, remember, that's just PCE, strip out food and energy. We're not reinventing the wheel here. It's relatively simple. Core PCE is a number everybody quotes, and that's fine. That's fine and dandy, but just understand what it is. It's just PCE without your food and energy. That's it. So what do we got? Core PCE price index came down to 0.1%, beneath 0.2 expected at 0.2 the previous month. I'm going to forget the year-over-year stuff, even though that one rose. That should really blow everybody's hair back. And then your PCE price index year-over-year, 2.2. That one came down dramatically, even though that does include your energies and food. I don't see any dropping in the food prices at all, but I do see energy sort of stabilizing. Believe me, that's going to change. Well, crude oil is a big determinant, but so is natural gas. And when natural gas starts going up the way it looks like it's going up, well, that's going to change. In any case, PCE price index month over month, 0.1%. That's beneath 0.2 and 0.2% expected. So take all that data, stick it in a pot and stir it. What does all of it mean? It means that at least on paper, the growth of inflation is slowed. Doesn't mean that inflation is slowed. It just means the growth of inflation has slowed. So when you go down to the store later today and you saw all this beautiful reporting on how great these numbers were, you can see, and you go to buy your groceries, just remember that prices are still going up. They just weren't going up as fast as they were. This is the chart. This is the chart I always fall back on, and a lot of economists out there, not a lot of them, but a few of them that I know don't like me. They don't like me because they believe, Shane, you're lying to the people. Inflation, PCE, inflation's always going to rise. That's the way our system's built. We're built on growth, a devaluation of a fiat currency over time, and rising inflation. And I'll say, yeah, that is exactly what it is. Hey, listen, I got a degree in finance. I went to school. I read all the books. The problem that the scholars have here, the problem that most of the economists on CNBC have, is they don't have any context. They're not using their brains. Use your brain. This is your raw data. We had this thing relatively under control last year. Bang. We take off again this year. 2024 has been just a hellacious year for inflation. It's been brutal. A little bit of a plateau there. There was more optimism last spring. Okay, then what happened? We sort of came up. We kept rising. And what all that means is it means that this chart right here is what I would pull out to any economist at Wharton's that tells me that I'm not right. I'd say, listen, go back to 1960s. They'll say, yeah, but everything's changed. And I go, okay, fine. We leave the gold standard right there in the early 70s. And then you see inflation, introduction of credit cards right there. We had to boost consumer spending to get the world out of recession. That happened early in the early 80s. And then what did you have here? You got just sort of a freight train. You got a pullback right there. That was the crash of 2008. And then we come right up here to 2020. COVID pulls back a little bit. But look what's happened since COVID. My point is this inflation chart shows that your growth, that the actual what it's costing people to live, is not growing proportionally with everything else. Now, they'll argue and say, yeah, but real income's up or all that. And I said, I don't care. That's a function of just printing more money. And they'll say, well, yeah. And I'll say, how you can't do this forever. You can't. There's no way. You can't do it. So this trajectory right here, this 45-degree angle towards the end of our chart that's really developed since COVID, since we flooded the markets with oil to keep them from melting down, that's the game. I don't expect this chart to come down. You're never really going to see anything come down. Notice, it takes major events to bring deflation into play, but we do need to see it flatline for a couple of years. We need to see this thing flatline so we at least aren't paying $20 for a loaf of bread. I'm not interested in that. I don't even like bread that much, unless it's a classic, something good, maybe some good sourdough or maybe some good French bread, something really good. But this is just ridiculous. This is absolutely ridiculous. So I would argue tooth and nail that this headline right here is unbelievably irresponsible. We're going to go to the US 30 in a minute. It was up about 400 points earlier. It's given back all of its gains. We're starting to see the NASDAQ fall. We're starting to see the E-mini S&P 500 fall right here. Key U.S. inflation gauge shows prices cooled in August, raising likelihood of more rate cuts. What's the first thing we think about? I just showed you the chart. It's growing. It's still growing. We've been growing. We're at a 45-degree angle. We haven't even slowed down this inflation period. We haven't slowed it down. Now we're already talking about, let's just cut rates more. Think that's smart? Remember, when you cut interest rates, you're putting more money into the market to stimulate what? Spending. We want more consumption. We want more economic growth. The only way really to do that is to flood the system with cheap money. I'm not kidding. Since Wednesday's announcement from Jay Powell, half-point rate cut. Personally, I've received 3 offers to up my credit lines on my revolving lines of credit, my credit cards. Offers are coming in that extended my credit lines. And I said, wow, that didn't take long. It was almost like it was planned. I know I'm ranting, but it's the truth. I don't know that we're ever going to get control of inflation. What does that mean? It means that the markets are probably going to move higher, but your standard of living is going to be tough to maintain. In any case, right here, you'll see exactly what that perception of today's PCE numbers meant. 52% means what? It means we're going another half in November. We're going another half-point rate cut in November, and there's a 47% chance that we go a quarter point. Where do rates end the year at? December. We're going into New Year's Eve, getting out the champagne. What does it look like? We got about a 78% chance of going down around the 4% mark. That's significant, guys. That's significant. That's another, 3/4 of a point? Full point. Wow, that's extremely dovish. That's extremely dovish Fed policy. And is it responsible? Isn't it responsible? You know, they're the policymakers. They make a lot more money than I do. But what I will say is I think it's reckless. I think it's really reckless. So let's see. Daniel, you at least are still credit worthy and nobody offers me credit. Hey, I went through it, Daniel. I couldn't get any credit from about 2000 and what? Let's see. After the housing market went down, I had to sit on the sidelines for a while. And it was tough. But keep fighting. Just keep fighting. That's all I can say. You can make a comeback. It just takes some time, and it was a good thing for me. I got my head on straight. But yeah, I hear you. I've been there. In any case, US 30 right here. You're looking at what, a big 3 week. It really is a 3 week bull run. Does anybody remember this right here? Early September. Remember that week? Remember this back here? August. That carry trade came undone and absolutely crashed the markets. And then we had the big correction right there. Everybody's thinking that, okay, we're coming off now. Nah, we're going a little bit higher, but I think we start coming off here after the election, building the shorting strategy as we speak. What do we want to do until then? We want to buy. You have favorable inflation numbers today. That suggests that you're going to get your rate cuts. What's that going to do to stocks? It's going to send them higher. So for this US 30 CFD, this pullback, Johnson right here, this pullback zone, 41,617, that's great. I'd be looking at that early next week. How about daily? I don't like this at all. Why? Because you had real tight doji, then you had a pullback and then a break. Don't really have a Fibonacci sequence there. I'm going to be on the sidelines for the Dow 30 at least through probably Tuesday. I'd be looking at that saying, yeah, we're going to have to get a move. We're going to have to get a serious move before we get any sort of pullback. But right now we're trading 42.3, somewhere 42.350. We're looking at 41.6. So what is that, about 700 points? We could easily get that. In just 2 days. If you wanted to get hyper aggressive with this, daily Fibonacci, you could buy right now if you wanted and try to trade that through the end of the day, into the session, 42.3. It's probably a pretty good level. Well, dial it in exactly, but you get my meaning. Right there, 42.3. You could probably bid that. Have we already hit that level today? Just hit it. Well, we're late to the party, but you can see right there, we just hit it. What's your low there? 42.319.7, and then you bounced up 50 points. That's the power of Fibonacci's, that's for sure. As far as, you know, what can we expect from here? Well, you know, if we get a little check maybe Monday down here around this low, that'd be great. I just don't really care for the market structure at all. I just don't like it. I think it's compression break. It's no doubt we got compression right around 42, and then we broke. One thing I will say, take everything off. Take everything off. Sometimes we get confused. I know I confuse a lot of people, and that's okay. I do my best to keep it really simple, but this is as simple as it gets. You know, I'll even take that off. Okay, what do we potentially have here? We sell down a little bit more today. We've got sort of a hammer formation, sort of that inverted hammer I talk a lot about. Why exactly would that be important? Hammers are very important. Always understand where a hammer is. What that means is you had a tremendous run up in price. Okay, the bidders owned it, and then the sellers stepped in and dominated. And that little body right there is going to be sort of a signal that, okay, we had a major run-up and then a sell-off, and then what happened? Typically, that's a reversal signal. Now, I'm looking for other hammers here. We could say that was a hammer, but look, we didn't really trade beneath it. We didn't threaten the Constitution of that day, so I'm not really too excited about that. Also, that was a Fed day, so a Fed day hammer, I don't know. At the time, we were probably thinking it was going to be bearish, but that's not really how markets work. This is a great example of a hammer. Absolutely fantastic example of a hammer. Boom. I don't know if you can see it on the screen, but nice big sell-off right there. Nice big sell-off and then a reversal. That's a great hammer. That's more of a doji in my view, but you could call it a hammer. You just didn't trade above it, so didn't get the reversal there. Hammers are powerful. If you're going to learn just a few chart patterns, or candlestick patterns, learn what a doji is, learn what a hammer is, and learn what an inside day is. Those are huge. Those are absolutely huge. All right, if we wanted to get sort of into the tall grass here, yeah, we got time for one more market. Well, actually, let's just check in with our live trade action. We didn't get it. That's not fun. It's not fun. But if you're going to trade and you want to be a winning trader, believe me, that the money you save by waiting is going to give you a chance to make money in the future. Unfortunately, was this a good sell for me? Boy, we were right up at 68.50. Looked like we were going to make a run at these highs. I'm sitting right there with bells on waiting to take that short. We just aren't, it doesn't look like we're going to get it. And if we don't get it, there's not really much else we can do other than just sort of pack our stuff up and come back Monday. Believe me, there's going to be plenty of trades. And if you understand that there's always going to be plenty of trades, then you're going to be just fine. You won't force anything, and you'll do just fine as an active trader. So that's pretty much where we are for this week. Unfortunately, I wanted to trade some. We're going to do some, I don't know, I'm thinking of different ways. I think we can start trading some real money in here and do, sort of just show you exactly what it is. Not necessarily to follow what I do. My strategy is put together from a decade plus of work. I mean, that's sort of, mine. You don't have to trade like me. We've got a ton of strategies out there, and they all will work. You just have to figure out which one's best for you and then dial in your risk versus reward. And the number one thing traders don't do, they don't wait. They don't wait. We try to trade too much. If you find yourself needing action and you want to trade a lot and you got to get in there and make it happen, do it, but find a strategy that's designed for that. Grab that 9 EMA and put it on a 5-minute chart. You'll make more trades than you can believe. You'll be tired at the end of every day. That's not my style. I would rather take fewer trades and just pile on the risk. So that's my personality, but your personality may be different. Put a 9 EMA strategy that we just put out, put it on a 1-minute chart. Put it on a 1 minute. See what happens. You may find a time of day where a 1 minute on, say, the S&P 500 is absolutely a cash cow with an EMA, with a 9 EMA or something like that. But you're going to have to put the work in to get there. All right, guys. I'm going to sign off. I want to, one more time, give a shout-out to my Montana Grizzlies. Big game tomorrow against Eastern Washington. Huge rivalry game. Can't wait to get it on there. Like Daniel says, there's always another Monday. Don't lose all your money on Fridays. We're going to skip the no donation speech. You guys should all know it by now. But Monday is back in full effect. We've got a big trading week next week. Remember, NFP is the headliner. We've got a couple of news days in there that are sneaky. They're sneaky because they're big. There's a lot of news out next week. And then also remember your weekend news cycle. Very, very important on a weekend news cycle that we understand those macro market drivers, those fundamentals can really shake markets up. Right now we're watching politics, geopolitical conflicts. We have almost religiously seen rallies in precious metals ahead of the weekend break. We're not seeing that today. We're seeing a sell-off. Are things changing? Maybe they are, maybe they aren't. All right, Daniel, come on, Grizzlies. All right, everybody, thanks for joining me this week. We'll be back ready to go. Connor's up in about 2 days. We'll be back in the saddle ready to go with NFP week. Can't wait to get us started. All right, everybody, have a fantastic weekend. Finish the week strong. We'll see you Monday.